Good afternoon. This is one of they normally call it the last laps, the final laps. Is it the final laps? It's almost the second last lap, isn't it? So I hope you've had a good lunch. Welcome to our session. We want to keep it as interactive as possible, so please ask questions. There is no such thing as a bad question or a dumb question. You can ask. We have very big panel of international financial experts, as you can see. So I will briefly ask each of them to introduce themselves quickly, where you come from, what you do, before we get into the subject matter. So, Carol, grab a mic.
Thank you very much. Hi, everyone. My name is Karol Karpiński, originally from Poland, but I live in DC. I work for the World Bank, supporting central bank and operators of market infrastructures in payment systems, development, and regulation.
All right.
Thank you. I'm Nyanya Dabo. I'm the Director of Development and Partnership for the Institute for Inclusive Digital Africa, one of the Gates Foundation implementing partners. And prior to that, I was with the United Nations Capital Development Fund. I was also with the private sector, Standard Chartered Bank. So I bring in that blend of public and private sector experience. Thank you.
Excellent.
I am Winston Damarillo. I'm an entrepreneur and a venture capitalist, so I'm founder of Higala. We are a hub operator out of the Philippines. And I'm also a deep supporter of inclusion. I do a lot of work with the World Economic Forum, specifically for Southeast Asia, with focus on enabling emerging markets. And we're excited to talk to you about, our views in how we make Mojo Loop implementations more sustainable.
Thank you very much. Carol, let's just dive right in. Before we go into the issues of grants and partnerships and payments, maybe you can give us a context of how the big span of payments, hubs, switches, and the different models, so that we can now get into the deep end.
Absolutely. So I think that the big word right now is diversity. This landscape has changed a lot, and one country differs enormously from another. So in the past, let's say 50 years ago, we had a very straightforward system where usually you'd have some basic clearinghouse operated by the central bank, and then perhaps the local bankers association would run a basic ATM POS switch in a sort of cooperative model. Now we have like two almost diverging trends where in some places, such as Brazil, the central bank or any other government entity uses the public purse to assume more and more of direct service provision role. And then you have other places where you almost completely abdicate that responsibility as a public authority and just leave everything to the market. There is also a trend of consolidation of service provision, where you have massive, large, sometimes even listed companies providing those hub-like services across different economies. Nets, for example, Equens Worldwide, Nexi. Those are examples of parties that like to, or Interswitch in Africa, I think another very good example, that believe that they can provide service on commercial basis. And then there are models that are somewhere halfway through. For example, NPCI, which is technically speaking an independent corporation, but with a very large input of the central bank and the publicly funded state-owned commercial banks in its operations, funding, and decision-making. So in a way, the world has become very, very diverse, and there is many different dishes on the menu to choose from.
Thank you, Carol. So Nyanya, you are an expert in this area, and so if I am a hub operator, and you've heard what Carol has been talking about, what would be the considerations when you are looking to set up a hub, and how would you make a decision between the different funding models available as explained?
All right, thank you. I think we need to look at the country and market context. No country is the same. And so I'll be sharing like hub experience based in West Africa. And many West African countries are classified as least developed countries. Usually debts are high. It's predominantly cash driven. So there has to be that sort of mapping and alignment. But I would say grant-based at the initial stage, and then blended at the latter stage to drive sustainability.
All right. Maybe we can ask Winston to give us more ideas about how that would work from a sustainability point of view, because most people think I am in the business to make money. So if then I'm going to give it for free, how then do I remain in business? So maybe you can address that area.
That's great. Great question. So our journey into open payments in Higala started with a conversation with the regulator. And it was initially, I'm a geek, right? First and foremost, I'm an engineer, I write software. So that's kind of my DNA. That's where I come from. So when I got invited by regulators from our central bank to say, hey, we have a problem that technology can fix, that was a really interesting thing to do. The problem, as described to us initially, was our switch is too expensive and it's brittle. Can you help fix that? And we thought it was a technology problem, right? And this is kind of when we started dealing with Mojaloop. A lot of the companies that I have built and I have sold in the past has been in open source. We work with the Apache Software Foundation. I was a director at the Eclipse Software Foundation. And we always thought that technologies like Red Hat made Linux work, right? And in my opinion, so we'd start with Linux, and let's start with Mojaloop, and we'll be the Red Hat for Mojaloop. And we'll come and help solve the Philippine problem of a very expensive, non-reliable switch. As we delve into the whole process, we have learned a lot more. To enable a national switch like what we're doing in the Philippines starts with an effort that is jump-started by governments and grants. And I think that's indispensable. It always needs to start that way. Otherwise, individual banks would only focus on what they focus predominantly, which are the bottom line. So grants jump-started the whole process. But then what is really important in the Philippine experience, we're in instant payments now for 12 years, and we feel like we're going to remake this again, right? What's missing is that long-term view, right? So enabling interoperability was the main goal of ePeso, which is the Philippine Initiative for Instant Payments in the past. And because that was a singular focus at the time, there was no conscious effort in selecting a sustainable technology and a sustainable business model to make this last a little bit longer. So as an entrepreneur, what we have discovered is, aside from fixing the technology problem, which we feel Mojaloop can easily fix, there are other things, right? So how do you then take it from a grant-making process into a public-private partnerships? And then how do you take that down to the ecosystem where money is trickled between big banks and small banks and payment providers and fintechs? Sort of like how Visa, MasterCard created interchange, right? And how everybody's participating in it. And in my opinion, only then when you complete that picture, you will have a truly, inclusive, enabled, and resilient payment systems in the Philippines. So that's how we approached it. Yep. I put the lens of an entrepreneur. We spend the money like a VC because we have venture capital. So I guess what follows from grants or venture capital, right? We suspend disbelief and let's just punch this through. But I think it takes that, right? And finally, I'm a citizen of the Philippines. I hate that our instant payment system's not as good as Zelle or Pix or UPI. So in activating the citizenry is also important because payments hits everyone, like multiple times a day. So it's really easy to explain why you're doing this and why it's important.
All right. Do we have any questions so far? We want to keep it interactive. I don't want guys dozing. So, so far, no questions? All right, I'll ask Kara a question. The African context of sustainable market infrastructure in as far as payments is concerned is considered like a road. The way I develop a road and then we say, okay, fine, this is the road, the government builds the road, and then we make the traffic rules of how that would work. How do you see that then transitioning to become a sustainable model? Because if government keeps doing it, then there's the pressure to make sure that it will remain sustainable, it remains functional, And how do you balance those two, the issue about public interest, making sure that people actually can afford it, but even then, you still need to pay for the road?
A very, very good question. So I think that whenever we want to balance public interest with commercial sustainability, the very first step should be to articulate what exactly the public interest is in this case. And I think that this is the failure mode of many governments. They want to do something, but they don't know what exactly they want to do. And public interest and the way you express public interest will differ from country to country. Like, let's say, in the United Kingdom, the public interest is often defined in terms of access. There's access to cash consultations. There is an issue that perhaps pensioners living in small countries, in small cities, small towns, will not have access to ATM machines, and they will not be capable of transacting digitally. So that is how they define what the public interest is, right? For other places, for example, Brazil, public interest is defined partially in terms of digital sovereignty, which is a very different cup of tea, because there, for example, you're paying for the assurance that a foreign corporation will not all of a sudden turn your infrastructure off on a whim or because of geopolitics. For some other contexts, public interest lies in antitrust. We want to make sure that there is a level playing field for end-user provision of financial services, and therefore we need to maintain those roads and right-of-way on those roads for everybody, and this is what public purse is paying for. So first, that public interest has to be articulated, and once that has been articulated, it would be good to have some KPIs or some measures of how well it is met by this infrastructure. And depending on actual legal and regulatory arrangements, we could have some form of block grant, pay for results, perhaps the guarantee revenue system. But also, it's possible that public interest articulation will change over time, and commercial considerations will be more at the forefront. I would say that for many cases, many parts of Africa or African digital infrastructure projects, this public interest angle is somewhat related to antitrust/competition, which makes it tricky. In a lot of cases, we want those public infrastructures to be there so that we're not depending on closed-loop system by a single provider. But at the same time, we do not want to create the impression that we're sort of hand-steering the market and artificially trying to drag down, for example, the leading mobile money provider or any DFS. So it's tricky, but we probably should start with articulating what that public interest is, and then we can try to cost it.
All right. Nyanya, you are from the Gambia, and I know you have some experience in there. Maybe you could tell us the considerations, how you would see the view from the same question?
I think for me, when we talk about sustainability, the key is when do we start looking at the issue of sustainability? Because very often you would see that sustainability is addressed in the middle of the program or towards the end of the program. And usually that brings a lot of issues because sustainability has to be tackled at the beginning. Right. It has to be looked at in the beginning. If you're going grant-based, up to what period? What length of period do you have for implementation? Right. If it's 10 years, the grant comes in up to year 5. What happens? So it has to be at that planning stage. That is one. What we also see in our area of continent, going by what my friend Carol just said about public interest. Usually in Africa, most public interests are politically motivated and politically driven. So it's not the real and true public interest unless it is on a private sector sort of angle, as we have seen in Senegal, as we've seen in Kenya with the M-Pesa, where they're really addressing a public interest, where the average Kenyan would go out and then look for money to send back home for a meal for that day. So it's a combination, but the key for me is sustainability has to be tackled in the beginning at the planning stage. Thank you.
I think you're right, because the biggest problems we have with government-led switches is they will implement the initial investment, and then at some point they decide, you know what, I am government, I'm not in the business of payments, so I'm going to give it to you guys. And then now I'm giving it to you and you run with it as a business. So how do you manage? Because if the government gives it out to a private sector player, like Winston said, then it becomes more of a profit-driven engagement. So how do we balance when you mentioned I'm planning to say in 5 years, we will then look at PPPP to make sure that we engage the public to own some bit of it. What are the considerations? And I don't know, you passed the mic to Carol. I don't know whether you didn't want to do it, but
I want to say, let me. I'm going to yield the floor to my distinguished colleagues and co-panelists, but just one line from me. This is why perhaps the government should take a step back when it comes to designing financial infrastructure. It could design the broad strategy, but a lot of those government design switches sometimes look like, this famous saying, a camel is a horse designed by a committee, right? So in a lot of places where the government has a very hands-on operational role, we end up with a camel with many humps. So even if we start with a role of a government, perhaps having more of an arm's length situation where the switch is run and the strategy is designed from the get-go by industry professionals, perhaps with some participation of institutional investors or sector investors, could be good for sustainability.
all right.
Yes.
What he said.
Yes, I completely agree, but we also have to understand that when it comes to policy, that conducive environment is the responsibility of government. And very often what we see is that countries get into interoperability and there are no policies in place. There are no laws and acts in place, so there is no discipline in that sector, and so that also causes problem with sustainability. So we need to understand what role each stakeholder plays, and we give you that responsibility, and we can also support you with that responsibility, because many governments may not have the capacity or the capabilities to prepare these policies, but this is where we come in also, grant-based, support them, prepare those policies, put them in place, and those would be the sort of guidances to help drive sustainability. Thank you.
Winston?
Yeah, I think we can hear it.
Yeah. Yes, there's that discussion, but the biggest problem in Africa is actually inclusion. And while we are talking about inclusion, we are looking at the either excluded from the market, the players excluded from the market, and those who are unable to access. How do we then balance those considerations for inclusion, sustainability, and the whole agenda of pricing and all that? How do you see that coming in?
Yeah, so I've been speaking a lot with regulators these days, and you learn to really quickly learn how to oversimplify things when you're talking to regulators. But I think from an inclusion standpoint, we all talk about inclusion, individual inclusions, right? That people don't have bank accounts or they don't have access to digital cash. And oftentimes we overlook institutional inclusions, right? So are we in the process of building an instant payment system? Are we enabling the rural banks? Are we enabling the co-ops? Are we enabling the last mile providers for that? And if you ask that question in the Philippines, the answer is no, right? Only 5% of rural banks in the Philippines connect to InstaPay. So from that perspective, we fail. And if you don't connect to the rural banks is the last mile or the first mile for people that is on-ramping themselves to economic participation, right? The freelancers, the retailers in the market, those are the ones that we should be building instant payments for, right? And if we overlook the institutions that serve them, meaning the co-ops and the rural banks, then we will never get there, right? And the need there, unfortunately, unlike building a switch, switch is big, defined, but it's clear. Enabling institutions is a little bit more difficult. They're diverse. In fact, one of the things, we call them DFSI here at Mojaloop, but a rural bank is very different than a co-op, it's very different than a thrift bank, it's very different than cooperative lending, right? They have different needs. So to me, in order for inclusion to actually get to its intended participants, we should think about the institutions to do that. And that's one of the areas that as we built the Mojaloop infrastructure for the Philippines, we think of those institutions and what helps them, right? So the central bank is the best institution or entity that can provide the switch, but there are other participants, like the bigger banks have a role to help the smaller banks, for instance, in the Philippines. So I think once you want to kind of click the entire chain of how do you trickle it down all the way to the bottom, and you don't forget, along the way, the participants in the middle, it's hard to accomplish. But if you get them all in the ecosystem a little bit sooner, then that's a bit easier to do.
All right. I'll do another round of questions. If there is anybody with a question. It's a very quiet audience. I don't know whether we are.
But World Bank has some money to offer.
Yeah. Who wants a loan?
Who wants a loan? Or who wants a grant?
There you go.
Yes,
Now everyone is awake. Carol, you're in trouble.
Carol, I wanted to ask you a question. A lot of people set up to start a switch, and of course there's the uptake of traffic to make sure that it is sustainable, because if there's a switch but there's no traffic, it's like building a highway where nobody owns a car. So how do you then match or mix the grant component of financing at the initial stages until you see that there's enough traffic to then be able to afford the operations of a switch? How would you, for those of us who are wondering that question?
Oh, that is a very difficult question, but I'm still...
You're in the World Bank, right?
We're in the business of answering difficult questions. So I really liked the road metaphor, because yes, building a toll road where there is no cars makes no sense, but also building a road from nowhere to nowhere is the surest guarantee of there never being any cars on the road. And I've seen that problem with many switches throughout the past 10, 20 years. So first of all, like business model of any infrastructure provider, any switch, assumes that you're taking some cut of a very high volume of transactions, but you're not generating those transactions. Initiating those transactions and marketing them to end users, that's the responsibility of your members. So one failure mode would often be the top-down approach, where you are marketing as a switch, as a clearing infrastructure use case that does not have any take-up among individual banks or digital financial service providers. Like, let's say we're going to do request to pay as our, the cornerstone of our business model, but none of our members is offering it, and they're saying that the market doesn't need it, right? So that's, as a first order of business, we should really avoid that. On the other hand, some of the successful examples, and again, fits nicely to your road metaphor, were cases where kind of cash cows like check clearing or other good revenue streams were used to sustain the infrastructure and help innovate and promote the new use cases, which is pretty much the story of NPCI, that managed to bootstrap itself by acquiring check clearing responsibilities from RBI. But of course, with my institutions, our institutions being in the business of grant and grant loans, concessional financing, let's talk about grants and mixing grants and markets. So I'm a big proponent of matching grants in whatever capacity. I do think that if the market really believes in this infrastructure, they should put their money where the mouths are. Not necessarily all the money, but there should be some participation, because that's like your initial test of product market fit as a switch operator. If you fail that test, you probably should go back to the drawing board and redesign the process. Or if you believe that this serves important public interest, just think about government revenue financing. Just set up a tax that will finance that infrastructure and have that sustainability. Try to stress test the finances of your switch, assuming different scenarios of grant or concessional loan funding. We have gone through some interesting times earlier this year with USAID, and I think that's a good wake-up call for many people in the business to make sure that they're not putting all their eggs in one basket. I think bringing different parties together, and this is also what we're trying to do as the World Bank, we're trying to actually crowd in financing by other multilateral development banks and other parties, is also a way of ensuring greater sustainability and avoiding that all eggs in one basket situation. But all in all, I would say matching grants, product market fit, making sure that everybody's crowded in, that's the way to go.
All right, Nyanya, you've been involved in implementation, and I heard you mention starting planning for sustainability from the beginning. For those of us who already have started the journey, is it too late to plug in sustainability, and how would you advise somebody like myself who has a switch that now needs to plug in sustainability? What would you say?
Well, it's never late to plug in sustainability, so we should get that right. But before I answer your question, I want to go back to Carol's response, and I'm putting my private sector hat here. And I think the example that we used, especially in the African context, that example of building a road and there are no cars, I think it's a wrong example to use in the case of interoperability, because Africa mainly is predominantly cash-driven, and we all know that it costs a lot of money to print cash, so we know that the transactions are there. So using that example, I think is a bit off the road or misleading. So I think to address that question, I think the fundamentals are there. They're working in silos, government working on their own, donors also working on their own, private sector working on their own. So there needs to be that element of strong coordination between all the stakeholders, the public, the private stakeholders, and there has to be a common goal and objective. What is it that we're trying to achieve? And then it's a journey. It's not something that can happen overnight. So maybe year 1 to 3 would be 0 to very low transactions, and then you see the transactions going up by the number of years. But I am going to, I am in for that. There's always transactions when it comes to interoperability. So how do we create the awareness? How do we coordinate? How do we consolidate to make sure that the impact is there and it's realized as quickly as possible? So, and now to answer my question, I mean, it's never late to plug in sustainability, but it is better to plug it in the beginning, because, you know, if you plan, I mean, your success rate is higher. But it's never too late to plug it in. And the late plugging in, this is where the importance of consolidation comes in place. I mean, if you look at, for example, Gambia, you have IMF supporting the central bank with interoperability. You have the World Bank also supporting. Now you have the Gates Foundation also supporting. And we are not really talking to each other in the country. But yet we're talking together outside the country. And, and it's the country that matters most. So I think this is something that needs to be done. And it's not intentional, because very often, like, Carol is based in Washington. Does Carol know the person in Gambia? What is that person doing? Is it aligned with the country objectives? So for me, it can come in at any time, but then the issue of coordination and consolidation plays a significant role. Thank you.
Yes, you're right in that the road knowledge doesn't work where cash is. And I remember when I used to be in the bank, we used to say we are not fighting against each other. We are fighting against cash. We are moving from cash heavy to cash light, and eventually, hopefully, zero cash. And that is true, and for that consideration, then obviously we are talking about the opportunity cost of cash and the movement and the cost associated. So that is correction taken. We agree. Any questions so far before we get Winston to make an answer? Yes, sir. Do we have a mic?
Thank you. I did have one question. Carrying on the metaphor of the highway, we now have a number of switches that are coming up in Africa. We have PAPS, we have COMESA, we have EAC that's coming up, we have TCIB, etc. Is there a danger that we'll have too many highways? And what role do funders have in trying to rationalize the process? Thank you.
Who did you target your question to?
To Carol.
Carol, okay.
Okay. I'll try to tackle that. Really, it all depends on whether we're going to see commensurable growth in the number of transactions. The big issue that I think almost everybody in this room will agree on is that intra-African commerce trade is still well below its potential. And if Africa reached the level of economic integration that we're seeing in ASEAN, in the EU, or even in some parts of Latin America, then all those switches would get sufficient volume to sustain not only themselves, but many more. But of course, there is a danger that we create that infrastructure without legal, regulatory, and commercial incentives for usage, and we will end up in that spot. I guess ultimately, funders do have responsibility to ensure that the cash is used judiciously. But at the same time, I can speak for my own institution. We're a cooperative owned by our member states. Like, you are my employer. So ultimately, I can offer my best judgment, but I will not refuse your instructions as owners. I think in this case, we have not yet moved past the situation where we have not reached the situation where we have too many pieces of infrastructure. And if you look, for example, by the number of clearing and settlement mechanisms within the euro area, there is a list available on the European Payments Council website. There's probably at least a dozen, if not more. So there is still scope for growth, but I think we should, as funders, acknowledge that danger, make sure that there is rigorous economic analysis backing new infrastructure efforts, and support inter-scheme interoperability so that actually those different bits of infrastructure can act in synergy rather than compete with one another.
Thank you. Thank you. Thank you. Any other questions? We have, I think, 3 questions available. 1 is gone, so we have 2 slots. Carol will give a prize for whoever asks the best question. Oh, yes. There we go. There we go. I know, incentives always work. Incentives work.
Now with the money coming. Yeah, I was just wondering with the promotion of interoperability, maybe picking up from experiences in other countries in terms of how has this fared with the competition in each country between the critical players, particularly countries that don't have many players. How have they taken interoperability, and how has it been dealt with? And particularly, of course, I know the World Bank supporting infrastructure development in many countries. Then secondly, in terms of inclusivity, even as we look at moving to the different highways and sophistications in payment systems, with Africa and even the rest of the world in terms of aging population, how do we see inclusivity, particularly of the aged, in the sophistication of payment systems?
Did you target that one to Carol as well?
Must be the only lady in the
Okay.
group.
Nyanya, sorry.
The only lady.
Maybe you can also make your
Thanks,
final
Matt.
comments.
Did you hear that? I think in the case of Africa, there isn't sort of multiple hubs. Mainly there is one hub. So where you see the competition really is on the DFSPs. That's where the competition really happens, because we normally have one hub operator. And the competition, because we just had a validation session last week in the Gambia on the scheme rules. And there was that element of competitions between the banks and the wallets. And at the end of that deliberations, they found out that there was no competition. There was no need for competition. Instead, there was the need for collaboration, because what the wallets are there to do is extend the services of the banks at the lower level where the banks can't reach, or where it's not profitable for the banks to reach. So we see those kind of competitions in the market at that level. Now, to answer your question on inclusivity, it's still a big issue. When we look at inclusivity, we cannot take price out of it. It is what is going to drive usage. So accessibility normally would come in a form of a grant to put in the infrastructure in place. But once the infrastructure is in place, then there are other sort of steps that needs to be taken to drive usage, and affordability plays a key role. I mean, this morning we had our steering committee, our chair is seated here, who's the Deputy Minister for Digital Economy, and he was asking our partner Glenn Brook to look at the financial analysis, to look at the option of P2P being free of charge, you know, to drive usage. Really that is country-driven. Different country, different markets have their different dynamics, their similarities, but never the same. For us, inclusivity really has to come to the bottom line, affordability. How affordable is it for that person to stop using cash and use the wallet instead? Thank you.
Okay, Winston, as you make your closing remarks, you need to answer the age gap question that was asked. In that perspective, do you have the same problem in
A couple of things we've seen in the Philippines, right? So first of all, there was a question on interoperability, right? We're about to embark on we only have one ACH in the Philippines today for instant payments, right? We're about to make it multiple ACH providers. So we're about to deal with this issue of interoperability. And it's hard to deal with that when you already have half a billion transactions per month. This is kind of the volume of the Philippines today. But that's an important thing to tackle because we've also gotten to a reach where our switch, in my opinion, is not inclusive, right? The intention is not met because it's only serving the biggest banks of the Philippines. So it necessitates that we need to take an alternative approach to service the rest of the community, which are the rural banks. But then as you do that, the big challenge now is how do you put two switches together? How do they work together and how can they interoperate? So that's an important decision factor, especially for those governments that are just beginning to implement instant payments, because we did this 12 years ago, and now we're beginning the pain of what we call technical debt, right, in implementing. So that's one to think about. But as we start thinking down the path of inclusivity, it's really age, geography, and distance, right? So for instance, instant payment requires you to have an app on a phone. And there are certain people that don't do that. Instant payment sometimes or most of the time requires you to have connectivity. It's hard to do that. And so lowering the barrier of consuming instant payments is an important factor to think about when you're thinking about inclusivity, especially when along with that is cost. You want to make it close to zero. So those are the things that most countries think about today. And then the final thing, the bottom line of this, and we still keep asking these questions in the Philippines, it does feel like digital is still more expensive than cash, right? We kind of all talk about cashless societies are better, but when you go to the rural towns and you talk to the communities, they don't feel it. They don't feel that digital is cheaper than cash. And so for that, I think it's incumbent upon us to think about other use cases, other solutions like lower cost of lending or getting direct remittance at a lower friction cost. Those kinds of things still needs to be a part of the equation because until people feel that digital is better and cheaper than cash, I think it does feel like we're not accomplishing it yet.
Final comments?
Those would be my final comments,
Okay.
right? I think the point is like let's make people feel that this is really better. And that's kind of the puzzle we're trying to solve. We advocate the technology and everything else, but if the last mile person you're trying to enable doesn't feel it, it still doesn't feel like work's done.
Okay, Nyanya, last comment.
For me, last comment is to make great use of the Moja Loop community. I think we can do a lot with migration of best practices, lessons learned from countries that have implemented the Moja Loop so that we don't make the same mistakes or we could accelerate deployment. Thank you.
Carol, take us home.
So literally one answer to the last question from a gentleman on aging societies and inclusivity. I really do think that prevalence of fraud and scam will probably be the greatest challenge for inclusion in the next couple of years. And this is something that we're falling behind and really need to work hard on. But my final sentence is that thank you all for being here because you're doing one of the most fun, most awesome, and most rewarding and most socially beneficial jobs in the world. So kudos to everybody.
All right, and bang on time. We are 19 seconds within time. So thank you very much for a very interesting panel. I hope you learned something. If you didn't learn something today, make sure you learn something before you go home. And another round of applause for my panel. Thank you.